The Nightly Business Report.
Good evening. Tonight, according to Deputy Minister Professor Anil Jayantha Fernando, Sri Lanka's central bank has invested 522 billion rupees and purchased $1.74 billion since last year to strengthen the foreign exchange market. A significant decrease in food prices drove Sri Lanka's July consumer price fall, outpacing increases in non-food categories including fuel and electricity. Both of the primary indices of the Colombo Stock Exchange reported losses as the day came to an end, as investors responded to foreign market volatility and economic concerns. And as investors awaited Federal Reserve Chair Jerome Powell's impending speech for hints on US interest rates, the majority of Asian stocks witnessed small rises today.
From Studio 24C, here's Prashansa Gunawardena.
Good evening and thank you for joining us. Since last year, Sri Lanka's central bank bought $1.74 billion and injected 522 billion rupees to support the forex market, says Deputy Minister Professor Anil Jayantha Fernando. These measures aim to stabilize the rupee amid ongoing economic challenges.
Speaking in Parliament, Economic Development Deputy Minister Professor Anil Jayantha Fernando denied claims that this government printed 1,226 billion rupees since taking office. He clarified that the figure represents the overall increase in broad money during the period and not direct money printing. Fernando explained that broad money rose due to a net increase in reserve money and efficient money supply from the banking sector. He highlighted that expanding private sector credit indicates people are taking loans and using savings for business activities. The net increase in reserve money, often seen as money printing, was only 137 billion rupees. The government borrowed 76 billion rupees from the central bank, relying mainly on government securities to finance a 2,200 billion rupee budget deficit in 2025. Fernando emphasized that if over 1 trillion rupees has been printed, inflation would have been much higher than current levels.
The United Nations Development Programme in Sri Lanka and the Ministry of Digital Economy signed a memorandum of understanding recently at the UN compound in Colombo. This partnership marks a significant step in advancing Sri Lanka's digital innovation landscape through Disrupt Asia 2025, the country's premier startup conference and innovation festival. This agreement recognizes UNDP as a strategic partner in supporting the ministry's efforts to drive entrepreneurship, technology and digital transformation. The MOU was signed by Mr. Varunasri Dhanapala, Acting Secretary of the Ministry, and Ms. Azusa Kubota, UNDP Resident Representative in Sri Lanka. The signing was witnessed by key officials from both institutions, including government representatives and members of the UNDP's Digital Innovation Team. Through this collaboration, UNDP will play a key role in supporting the government's digital economy blueprint and fostering inclusive innovation across the country. Sri Lanka's national consumer prices declined in July, driven by a notable drop in food prices, which outweighed rising costs in non-food categories such as electricity and fuel.
Sri Lanka's national consumer prices declined in July, reflecting a 0.2% drop from June, according to the National Consumer Price Index. This follows a 0.6% increase in prices recorded in June, highlighting a notable easing in monthly inflation. The decline was mainly driven by a 1.4% fall in food prices, reversing the 0.8% rise seen in the previous month. Despite the monthly drop, annual inflation rose to 0.7% in July, up from 0.3% in June, indicating a slight pickup in year-on-year price growth. Annual food inflation, however, eased to 2.2% in July from 4.2% in June. Prices of key food items such as vegetables, coconuts, fresh fish, green chilies, rice and egg saw notable declines during the month. In contrast, prices of chicken, dried fish, milk powder and fresh fruits recorded increases compared to June.
The Sri Lanka Ports Authority signed a terminal services agreement with global shipping leader Maersk today. The agreement aims to improve operational efficiency and increase throughput at the port of Colombo. SLPA's top officials, including Chairman Admiral Sirimevan Ranasinghe and Managing Director Engineer Ganaka Hemachandra, attended the signing ceremony. The Maersk delegation was led by Ms. Zanet Bala, Head of Operations for the Indian subcontinent, Middle East and Africa Africa. The partnership strengthens strategic collaboration in operational synergies between SLPA and Maersk. The deal highlights SLPA's commitment to enhancing port services and reinforcing its position as a leading maritime hub in the region. The agreement is expected to boost trade and economic growth in Sri Lanka. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange closed the day in the red, with both main indices posting losses. Market sentiment was subdued as investors reacted to economic concerns and external market volatility. Trading volumes remained moderate, reflecting cautious investor behavior. For further insights, we have Salama Sanoon from First Capital Holdings.
Thank you, Prashansa. Reversing the positive sentiment observed in the previous week, the Colombo stock market came under prolonged selling pressure. Despite some early buying interest during the initial trading hours, the all share price index entered a sustained downtrend. Banking sector stocks including Commercial Bank, DFCC Bank along with conglomerates such as Carson Cumberbatch and Silinco Insurance contributed significantly to the negative movement of the index. Accordingly, the ASPI closed in red at 20,649, losing 66 points. Investor activity remained subdued with limited participation from both retail and high net worth individuals. Today's turnover amounted to 5.1 billion rupees. This marks a 21% decrease from the monthly average, which stands at around 6.4 billion rupees. The capital goods sector dominated turnover, contributing 24%, followed by the banking sector at 19% and the diversified financial sector at 17%. The top three gainers for the day were SMB Finance Non-Voting, Maharaja Foods PLC and Tangerine Beach Hotels, whereas the top three price losers were Kerner House Global Solutions, Tess Agro Voting and Autodrome PLC. Thank you.
After 4 days of gains, the Colombo Stock Exchange closed lower today, ending the week on a cautious note. Both key indices slipped amid profit-taking and economic uncertainties. Investors remain cautious as global market pressures continue to influence trading sentiment. For further insights, we have Ranjan Ranathunga from First Capital Holdings.
Thank you, Prashansa. The Colombo Bourse continued its positive momentum for yet another week, with ASPI gaining by 431 points, or 2.1%. The growth in the market was predominantly driven by the noteworthy results recorded by the listed corporates, which saw earnings growing by over 50% on a year-over-year basis. The earnings growth was led by banks, diversified sector financials and conglomerates, which saw getting reflected from share price increases as well. The banks were the focal point of investments during the week, with making the largest moves, while the NBFIs or the diversified financials followed next. However, towards the latter part of the week, we saw the momentum getting shifted from banks to consumer services or the hotel sector, with early numbers for the tourist arrivals for the month of August showing very good numbers and looking to surpass the 2018 numbers that were recorded during that year. Meanwhile, turnover for the week also remained very high, recording an average turnover of 9.2 billion for the week, climbing up from about 6.2 or 7 billion levels that we saw during the previous week. With the increased turnover levels, we saw the participation getting improved as well, with participation getting dominated from both retail and high net worth investors during the week. Thank you.
Gold prices fell in Asian trading today, pressured by a stronger US dollar as investors reduce expectations for further interest rate cuts. Spot gold dropped 0.3% to $3,328.37 an ounce, while gold futures also declined by 0.3% to $3,371.15 per ounce. The overall decline in metal prices reflected the dollar's strength ahead of Federal Reserve Chair Jerome Powell's Trump's highly anticipated speech. Despite the fall, gold losses were limited by ongoing safe haven demand amid growing signs that a Russian-Ukraine peace deal remains unlikely. This week, gold prices have fallen between 0.2% and 0.5%, heading for a second consecutive week of losses. Investors continue to monitor geopolitical tensions and Powell's remarks for further market direction. Oil prices held steady today as fading hopes for a swift peace deal between Russia and Ukraine supported the market. Brent crude futures edged up 0.1% to $67.75 per barrel. While West Texas Intermediate rose 0.2% to $63.64. Both benchmarks had gained over 1% in the previous session, with Brent up 2.8% and WTI 1.4% so far this week. The ongoing conflict intensified as Russia launched an airstrike near the EU border, while Ukraine targeted key Russian oil infrastructure. Hungary reported that oil deliveries via the critical Druzhba pipeline had been halted. Meanwhile, Donald Trump is attempting to mediate a peace summit between Russian President Putin and Ukrainian President Zelensky. The Sri Lankan rupee fell further against the US dollar today, with both buying and selling rates rising, according to the Central Bank of Sri Lanka. However, it appreciated against several other major currencies, including Gulf currencies. Let's take a closer look on how the Sri Lankan rupee has performed among other major global currencies. A short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. CBSL LLC has named one of the fastest growing US companies since 2024, driven by strategic expansion and strong supply chain management. Founder Harsha says moving to the US was a key decision while continuing to support Sri Lankan suppliers.
CBSL LLC has once again earned a spot on the prestigious Inc. 5000 list of the fastest growing private companies in the US, continuing its recognition since 2024. The company recorded an impressive 104% growth, reflecting 6 years of hard work, passion and strategic focus. Its expansion into new areas of food and beverages, along with managing a multi-origin supply chain, has set the foundation for continued success. Founder Harsha noted that HVA's move to the American continent 7 years ago was the best decision of the business and his family. Despite the company's success abroad, he expressed disappointment over Sri Lanka's persistent red tape and policy instability, which continue to hinder local progress. Harsha emphasized his ongoing commitment to supporting Sri Lankan suppliers as a way of giving back to his homeland. CBSL's achievement is a testament to resilience, smart decision-making and global vision.
Sampat Bank PLC has joined the Asian Development Bank's Trade and Supply Chain Finance Program to expand trade finance access to Sri Lanka. The partnership aims to benefit a wide range of businesses involved in international trade, from large corporations to emerging enterprises. This agreement was signed by Sampat Bank's Managing Director Designate Sanjay Gunawardena and ADB's Sri Lanka Country Director Takafumi Kadano. Under this collaboration, trade finance instruments issued by Sampat Bank will be eligible for ADB's credit guarantees, reducing risk in cross-border transactions. This will enable Sampat Bank to offer more competitive and sustainable trade finance solutions to a broader client base. The move supports Sri Lanka's economic recovery by revitalizing trade and strengthening the country's financial ecosystem. Fonterra is selling its global consumer business to France's Lactalis for 3.845 billion New Zealand dollars, boosting its shares to a 7-year high. The deal includes brands like Anchor and Anlene with long-term milk supply agreements.
Fonterra's sale to Lactalis includes its food service and ingredients businesses in Oceania, Sri Lanka, the Middle East and Africa. The company considered both a trade sale and an IPO over the past 15 months, but chose the trade sale for better value and synergies. Several companies, including Japan's Meiji and Canada's Saputo, showed interest alongside private equity firm Warburg Pincus. The sale price could increase if bigger licenses are included. Lactalis aims to strengthen its presence in Australia and Asia by combining Fonterra's consumer brands with its existing operations. Fonterra plans a tax-free capital return per share after the sale and will focus on growing its ingredients business. The deal requires shareholder and regulatory approval with a vote expected in October and completion targeted for the first half of 2026.
DFCC Bank has successfully onboarded its first corporate customer onto its electronic banking platform, iConnect, via API connectivity. Prime Group, a leading real estate company in Sri Lanka, is now live with API technology across 3 entities. The integration enables real-time vendor payments, status visibility, and automated reconciliation through virtual accounts, a first in the local real estate sector. This system replaces older host-to-host methods, improving operational efficiency and reducing manual follow-ups. DFCC Bank's Senior Vice President emphasized that this marks a new standard in corporate digital banking. Prime Group CIO highlighted the collaboration's role in streamlining payments and automated reconciliations. The project was a joint effort between DFCC Bank's Gampaha branch payments and cash management team and IT department. API banking through iConnect now offers advanced features like balance viewing and status inquiry, positioning DFCC among global banking leaders. Loves Holdings Limited marks 30 years of growth and innovation, evolving from Gas Auto Lanka into a leading diversified conglomerate in Sri Lanka with a strong international presence. Loves Holdings Limited celebrates 30 years of visionary leadership and strategic growth across Sri Lanka and beyond. Founded in 1995 as Gas Auto Lanka, it has become one of the country's most diversified conglomerates. The group operates in sectors including power and energy, retail, manufacturing, logistics, pharmaceuticals, engineering and trading. Loves Gas has grown into a leading regional energy provider supported by a large fleet and LPG transshipment facilities. The company is also a pioneer in renewable energy through its hydro and solar projects. Loves Rubber exports solid tires globally, while Loves Supermarkets operates 40 outlets, including the country's first 24/7 store. Additionally, Loves promotes environmental sustainability, hospitality and homegrown lubricant brands with a strong international presence. The group remains committed to innovation, resilience and contributing Sri Lanka's national development. Their continuous expansion reflects a forward-thinking approach to business and community impact. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian stocks saw modest gains today as investors awaited Federal Reserve Chair Jerome Powell's upcoming speech for clues on US interest rates. Japan Nikkei 225 index remained mostly flat, while the broader topics index increased by 0.4%. Data showed that Japan's consumer price index inflation cooled in July, but core inflation stayed stubbornly high, exceeding the Bank of Japan's 2% target. The persistent inflation is increasing pressure on the BOJ to consider raising interest rates, with analysts predicting at least one hike by the end of 2025. In China, the Shanghai Shenzhen CSI 300 and Shanghai Composite indexes rose 0.7% and 0.3% respectively, with the CSI 300 reaching a 10-month high and the SSEC hitting a 9-year peak. Meanwhile, Hong Kong's Hang Seng Index gained 0.4% but remains slightly down for the week due to weak tech shares and mixed second quarter earnings. The United States and European Union agreed a joint statement on the framework trade deal struck at the end of July to end months of uncertainty for industries and consumers.
The US and the European Union on Thursday locked in a framework trade deal reached last month. It includes a 15% US tariff on most EU imports. European Commissioner for Trade Maros Sefcovic.
This is the most favourable trade deal the US has extended to any partner. A wide range of sectors, including strategic industries such as cars, pharmaceuticals, semiconductors and lumber, will benefit from this cap.
The EU has pledged to eliminate tariffs on all US industrial goods and to provide preferential market access for a wide range of US seafood and agricultural goods. Meanwhile, Washington will take steps to reduce the current 27.5% tariffs on cars and car parts. The EU said it would aim to ensure lower tariffs apply to its car exports retroactively from August 1st. But they still couldn't get duties lowered for one major sector.
Yeah, the tariffs on the wine, spirits and beer was one of very important offensive interests of the European Union. Unfortunately, here we didn't succeed. I just would like to add one very important word, and this is yet. Because our US colleagues, they know that this is our offensive interest.
US President Donald Trump and European Commission President Ursula von der Leyen announced the deal in July after months of negotiations. The two leaders met again this week as part of talks aimed at ending Russia's war in Ukraine. Both praised their trade framework deal as a historic accomplishment. The joint statement said the deal could be expanded over time to cover additional areas and further improve market access.
Walmart raised its fiscal year sales and profit forecast driven by strong demand from shoppers across all income levels who have turned to the world's largest retailer as they worry about rising costs.
Walmart raised its full-year sales and profit forecast on Thursday, citing strong demand from shoppers across all income levels who are turning to the retailer amid worries over rising costs. But shares fell as much as 5.5% in Thursday morning trading, as the world's largest retailer posted a second-quarter profit below estimates, its first earnings miss in more than 3 years. One analyst tells Reuters that estimates were too ambitious and, quote, "the miss is not indicative of a slowdown in business fundamentals." Walmart got a boost from a sharper online strategy as more customers relied on home deliveries. Its global e-commerce sales jumped 25% during the second quarter, and 1/3 of deliveries from stores took 3 hours or less. And even as weakening consumer sentiment due to tariffs has hit the bottom line of some retail chains, Walmart's sales have remained resilient. Walmart CEO Doug McMillon said the impact of tariffs has been gradual enough to moderate any change in customer habits. But he noted on a call with analysts that costs will continue rising in the second half of the year. McMillon added that middle and lower-income households are making noticeable adjustments in response to rising prices from tariffs, either by reducing the number of items in their baskets or by opting for more private label brands. The shift has not been seen among higher-income households, which Walmart defines as those earning over $100,000 annually.
That wraps up today's Nightly Business Report. We value your opinion. Share your thoughts and feedback with us through email at feedback.ad24english@then.lk or via WhatsApp at 076 805 7933. We will see you again tomorrow with the latest updates in the business globe. Vinod Varnasuriya will meet you next with other Derana Sports Central. Until then, I'm Prashansa Gunawardana. Thank you for watching and have a good night.